Hi there, welcome to kneppyinvests and welcome to another answer and reply video. I am time constrained, so I have to record this video within about 55 minutes. So let's not waste any time and let's get stuck into it. And I'm going to just go down the comments and your questions, and I'll start off with the most recent one from M. Solkar, SC7WF. Bio looks good at these levels. What are your thoughts? So we're talking about Biome. Actually, I just had a look at Biome's chart, which is interesting enough. Not like the most recent chart I looked at, but I did have a look at that maybe 30 minutes or so ago. The first thing I noticed when it comes to Biome is the share price has pulled back a fair bit from the highs. So share price did reach a high back in September at around about 84 cents. It didn't quite get above 84 cents the next peak. So that is a slight concern that we have seen a lower high and the share price has fallen to the mid 50s. There's a nice little support level at about 44 cents. And we have seen a bit of a crossover, not a bit, we have seen a crossover between the 25 and 100-day moving average. So that is actually a negative sign as well. The positive crossover was way back in July 2023 at a share price of 7 cents. So if you bought on that particular crossover, you've done fairly well. Now, that's just the chart. So chart is actually looking a little bit more negative than it has in a while. So if I was just charting or using technical analysis in regards to Biome, I probably would stay out of it right now. Now, when it comes to the company itself, this company is on the precipice of being profitable, operating cash flow and free cash flow positive. And I really want to see a little bit of scale when it comes to their business. And I haven't really seen that just yet. One thing I do like about Biome is they're pretty proactive when it comes to talking about how the company is performing. So they're really like releasing trading updates. The most recent one was on the 27th of November, Q2 revenue guidance. And then we had a business and international market update on the 13th of November. And let's have a look at the most recent cash flow report, 24th of October. So this company will release the next one, within the next month. Now, they could release it just over a month on the last few days of January, but more than likely they'll release that report about the same time as October. So I always go through these Appendix 4Cs or cash flow reports just to see how a company is performing. And Biome is sort of on the cusp. So receipts of customers, the first thing I do is I just have a look at receipts of customers, and Biome is increasing their receipts, their revenue, and that is a good thing. And the company is or very close to being operating cash flow positive on a continuing basis. This particular quarter, they're actually operating cash flow negative by 1.2 million, but we have seen the company being operating cash flow positive in the past. So that's probably a slight red flag that we haven't seen much scale in the business just yet. Now, they do point out quarterly sales are on the rise. So that is a positive, but I need to see that scale. I need to see the company generating cash flow in the business. The reason why I want to see that is if they get to that point, they can grow the company naturally without any capital raisings. Now, it doesn't mean they won't do a capital raising, because if they make an acquisition, the best way to get or make that acquisition is through capital raising. But that's the whole reason why being profitable, why generating cash flow in the business is really important, because that way you can grow your business, your company, through the cash flow you generate in your sales, that sort of thing. So that's why I do try to find companies that are getting quite close to that important inflection point. I'm not sure if I would say Biome is just there at this point in time, just yet. Maybe they'll get there in the next year or so. And the other thing I would always have a look at is how much cash they have on hand, how much debt they also have. So at this point in time, $2.7 million of cash on hand. And do they have any debt, which in Section 7, they have a little bit of debt, but nothing to be concerned about. Other than that, yeah, it's up to you. We're all going to have different opinions on all these companies I talk about. You could have higher conviction about Biome than I do. And maybe this pullback in the share price is an opportunity for you to buy Biome at a better price. By the way, I would not consider Biome to be a high quality company. It needs need to do a lot of work before I even get to that point. And because I will not consider this company to be a high quality company, I'm more likely to trade it than own it for the long term. Okay, DSHW5CC. Why are these really complicated names? Why not just Pete? I suppose Pete's been taken. Probably was taken when YouTube first started. Anyway, this person, DS, says MFD, is that Mayfield? Mayfield Education. Training halt, now voluntary suspension. Okay, so this is the sort of company I would probably never own unless I saw a really good trade. I'm not sure what done. I'm not sure why I would ever own this company unless it was a trade. Childcare centers, not for me. Not for me. I suppose this comes back to G8 education. G8 education was a bit of a market darling. Yeah, I'm pretty sure it was a market darling. Let's have a look at the chart for this company. This to Tico Gem. Is it still Gem? Yep, still Gem. G8 education. I'm pretty sure it was a market darling, maybe 2012, 2015, that sort of time frame. And the share price was in a beautiful uptrend. Now, there you go. 2000, actually, the uptrend was a lot longer than I thought. 2012, no, to 2014. Okay, so this company was a market darling. In fact, the share price went from about below 60 cents all the way up to $5.20. And that was the time to hold this company. Never was this company a long-term hold. Never. The whole reason behind that is the reason why the share price went up a lot is because they had a roll-up model. They kept on acquiring more and more childcare centres. And then eventually, because they were buying out childcare centres, and there is a finite number of childcare centres, eventually, if they wanted to keep buying childcare centres, they'd have to pay a premium. And that's why it was never a long-term hold. Eventually, that roll-up model plan does come to an end. And yeah, the share price has not even got close to those highs. So that was in 2014, over 10 years ago. So share price has literally dropped, maybe not literally, I was going to say 75% since then. Now, this is not about G8 education. I'm just telling you why I don't really like these childcare centres because, I wouldn't expect much growth unless they keep acquiring, and eventually that sort of plan will be unwind because there's no more childcare centres left. The industry is highly reliant on government regulations, that sort of thing. For instance, maybe the number of teachers or the number of childcare centre employees needs to increase per child. Little things like that can significantly affect any of these companies or all of these companies. Anyway, so let's have a look at Mayfield Childcare Centre. So trading halt on the 23rd and then suspension. So why would this be? In fact, I also released clarification. I have no idea. Actually, I was going to say it could be capital raising to buy more childcare centres. So let's see why they wanted it. Regarding a corporate transaction. So, release of an announcement regarding the acquisition. I was going to say corporate transaction could be a takeover bid for the company, or maybe they are acquiring something based off point B here. And let's have a look at the clarification request. And maybe there's some more clarifying statements in this. Oh, regarding the transaction. Oh, so it shouldn't have been acquisition. It should have been transaction. Okay, so this is a transaction, which could be a takeover bid for the company. I don't know, or it could be an acquisition. But I'm not sure why they had to clarify that. And they've gone to suspension because they only are given a certain amount of time for the trading halt. And obviously, this transaction is still working on it, or them and whoever is the counterparty is still working on this transaction. And let's see what they say in this particular announcement. Let's see if there's any further information here. Nope, just talking about the transaction. Up until the Tuesday, 31st of December. Anyway, let's have a look at the chart for Mayfield. See if there's any, oh geez, that's complete opposite to G8 education. So this is the weekly chart. The weekly chart looks horrendous. Share price has dropped from about $1.40 down to 49 cents. I say the daily chart looks pretty bad. It's in a downtrend. The probably one thing I'd probably would be of interest is where the share price is in relation to the all-time lows. So the share price has fallen below the COVID-19 lows. I don't follow this company at all. What has caused the share price to drop a lot? There could be numerous reasons behind that, but the chart does not look good. But the only thing that might look good here is the share price is near those lows back in 2020. So all-time lows, and maybe there's some value in this company at a market cap of 32 million. Okay, so that's all I'm going to talk about when it comes to Mayfield education. Matt Cobinden, IPH is a caretaker of companies' IP. Ironically, they once got hacked themselves. Well, I think it'd be ironic if IPH was like CrowdStrike and they protected the other companies from being hacked into. That would be ironic if they themselves were hacked into. I wouldn't say this is truly ironic. That's just me. Medical investor Brainchip broke out nicely after a bit of consolidation. I feel like Centuria Capital's chart looks similar prior to breakout or Brainchip breakout. Think it should break higher in the coming weeks. Let's have a look at Brainchip. I have noticed overnight NASDAQ was down, or the American indices were down. Brainchip has gone on a bit of a run. Yeah, a bit of a run here. This is just they have released a few interesting announcements, but does it justify this little run? Sort of reminds me what happened back in February. And it went on a massive run, and then its share price pulled all the way back down to where it started. So this could be starting another one of those runs. And I would say this is just a plaything for day traders at this point in time, because the company has not proven anything. And the market cap of the company is $615 million. So the company has to prove themselves. They have revenue maybe $1 per year. I'm being a little bit dramatic, overly dramatic, saying it's $1. It's probably more like $1,000. Let's have a look. Let's see how. And this is according to TradingView. They had revenue of $350,000 in financial year 23. Anyway, so this is still pretty much a story stock. And I have the only way I'd trade this or play this is through a trade, because the share price could drop 90% from here and still be overvalued if the story doesn't play out. Anyway, so it does look interesting, the chart, but again, how high is the share price going to go before it collapses like it did in February? Okay, and the other one was Centuria Capital, completely different companies, by the way. Centuria Capital. What's that? What's the ticker for that one? CNI? Centuria Capital. CNI. I was right, but I was not guessing. So this is a REIT-like company, or is it? I have no idea. Let's see if it's in my watch list. Where did I put this into my watch list? It's in my REITs watch list. It does look interesting when it comes to valuation. P ratio 14.86, but REITs, I wouldn't say they can fudge the numbers, but a lot of REITs profits is because of reevaluation of their property. I'm not sure if Centuria Capital fits into that. I have no idea what they do or what sort of property they own, if they own any property. Distribution or dividend distribution means they are probably a REIT. I just want to have a look at one thing they own. Just one thing. All I want is one thing. So let's have a look at their presentation. By the way, the chart, I don't get any nice fuzzy feelings when I look at their chart. And that's true for a lot of REITs, simply because we're seeing American bond yields just go through the roof. So their expectations from the bond market is we're going to see really sticky inflation, or maybe inflation will rise, and there's potential interest rates will rise or go up again. And that's not good for REITs by their very nature. I just want to see what they own. This would change my opinion. If they own stuff I don't mind, like I don't like retail REITs, don't like office REITs at all. Real estate funds manager. So this could be one of those ones that they own all the Centuria REITs. So maybe that's what they do. They just own all the Centuria REITs, or they manage all the Centuria REITs. There's quite a few of those. That's what I'm probably thinking they're doing. Funds under management not really growing in the last few years. Anyway, I don't want to get too much into this. It's 51 pages. I'm just going to have, they've got some guidance here, a little bit of an increase in or from 2024, distribution at 10.4 cents. So it's a nice dividend yield. That is a pretty nice dividend yield. And what is their, what's it called? NAV, that's it. NAV is $1.79, which is actually lower than this. There you go. So there's not much of a discount anyway. So I'm assuming that Centuria Capital is sort of the manager of those Centuria REITs. There's quite a few Centuria REITs, if I remember correctly. Like there's Centuria Industrial, Centuria Office. Yeah, if I had to choose one, I'd probably choose the Centuria Industrial. By the way, the chart, yeah, I'm not interested in the chart. Winston Hale, all these new names I've never heard of. Hi, Kneppy, got out of financials and add some tech and healthcare stocks for 2025. Your comment? Well, I cannot give any advice. If my portfolio was full of financial stocks like banks, I would be questioning myself. Why? Well, actually, I wouldn't be questioning myself. I'd be probably thinking, what a great investor I am. I bought all these banks and they've gone up 50% in the last year. But you have to get real. You have to be real about this. There's no reason why the banks have increased because they have not financially performed. In fact, they're flatlined. So something has caused the bank's share prices to increase. If it's not fundamental expansion, it's multiple expansion. That's exactly what happens. And when you do see a period of multiple expansion, eventually you'll see a period of multiple contraction. That's eventually going to happen to the banks unless they can significantly grow their profit. And I'm doubtful that's going to happen. So if I was heavily invested in banks, I'd be getting out. Maybe not all the financials, but a lot of financial stocks, including insurance companies, have gone on nice runs. And yeah, I probably would be, big if here, if I was heavily invested in financials, I'd put some of that into tech and healthcare, maybe. It all depends on the company. I'm not a real big sector investor. I don't look at which sectors are going to perform best and then put my money into companies within those sectors. I'm more of a high quality. If a company is high quality, financials, tech, or healthcare, I'm more likely to buy it for the long term. And then just technical analysis. Which companies' charts look really good? It could be financials, tech, or healthcare. That's the way I like to do it. But if, just playing a different what-if game, if I was one of those investors who didn't really think about technical analysis, and I was more inclined to buy companies in different sectors. If I was like that, I probably would rotate out of financials. Sensei, it is. Thoughts on AFI, Australian Foundation Investment? Was skimming through the December 2019 published book Money School from the library, and she speaks highly of them. Well, that's 2019. It was in the $6 area when she wrote the book, and 5 years later, it's $7.38. Okay. Australian Foundation Investment. Is this a fund manager? AFI. And if it's a weekly estimated NTA, so I'm assuming it's about 742. Pre-tax, you want to look at after-tax, 736. So that's about right. I'm just interested in what sort of companies or what sort of mandate they have. Let's have, here we go. NTA and top 25 investments as at 30th November 2024. So this is sort of like a fund manager, and I tend to stay away from fund managers unless I want to trade them because I could just buy these companies myself. And that's the way I like to do it. So let's have a look at the top 25 holdings. Am I interested in this particular fund manager? Straight away, my answer is no. Absolutely not. It just looks like it's the ASX 20 companies here. CBA, BHP, CSL, Macquarie Bank, National Australia Bank, Wesfarmers, Westpac, Goodman, Transurban, Telstra, It just looked like they did have different percentages there. Commonwealth Bank of Australia, 10.2% of the portfolio. Come on there. BHP, 8.1. So I would say CBA, not high quality. BHP, maybe. CSL, definitely, one I'd own for the long term. Macquarie Bank, maybe. Definitely not NAB. West Farmers, yeah. I'd own that for the long term. Westpac, nah. Goodman Group, yeah. Transurban, nah. Telstra, nah. James Hardie, maybe. Car Group, yes. ANZ, no. ResMed, yes. Rio Tinto, probably not. Woolworths Group, only if I get it really good value. Woodside, definitely not. Coles Group, and then we have a few other companies here. They do have a bit of money in Xero and RA Group, but their percentage should be, or the portfolio should be way higher than that. I just don't like this makeup of this particular fund. You can just do it yourself. Just go to the top 20 or ASX 20 and find which companies you like and just put your money into those companies. And you don't have to pay a fee. So I have no interest in these sort of things. Funny enough, they have a share price premium discount to NTA and has been negative, but that's probably based off the pre-tax, before tax. You have to look at after tax. You have to. So I don't know if anyone. I'm not sure if I should just mention what before tax and after tax is. So the way to think about this is if they sold all their holdings, they would get, on the 30th of November 2024, $8.48. But there is capital gains. They would have to pay that. And after they pay the capital gains on all those, good performances they've had on their investments, they would only have $7.03 to distribute to all the shareholders. So you have to look at after tax because taxation is a real thing. And anyway. And let's have a look chart for AFI. I'm pretty sure this is in my watch lists, unlike watch list. Let's have a look. It's in my funds and LIC watch list. I'm going to have a look at the weekly chart. And I have a look at this weekly chart and I go, no, not for me. Now, over time, it has increased, but that's probably just like the ASX or the XGO. Just put your money into the XGO or ETF, that sort of thing. I don't think this fund would be beating the market. So that way, just put your money in the ETF. And the whole reason I say that is when I have a look at the holdings, there's nothing special about the holdings. And I think that's their plan, is to get near market returns. Because if they underperform the market, people might take their money out. That's just me, though. No interest. I have no interest. Recession, Bega and Kogan pushing forward. Okay, I don't have Bega, but I definitely have Kogan on my watch list, on my trading watch list. So let's have a look at Bega. My only concern about Bega is valuation, and even for technical analysis, valuation does matter. Apparently, research has been done on this. If you have two similar companies with similar breakouts, the one that is better value will more likely outperform the one that is overvalued. And it sort of makes sense if you dig deeper into it. Anyway, so Bega Cheese chart actually does look really good. Broke out back in over a year ago, early December 2023, at a share price of $3. Share price has almost doubled since then. So this is a really nice chart for Bega Cheese. In fact, there has been no sell since then. And for some reason, share price has gone a bit of a run after a consolidation period. It does look like a really good chart. P/E ratio 57.6. Dividend yield 1.39. That's probably my one concern is just the valuation. The market sees something here. The market may be expecting some pretty good growth. Or maybe the market is expecting Australians to eat more cheese. Kogan's the other one. Kogan, this could be the start of a long-term uptrend, just like Bega Cheese. Share price has definitely moved up. This hit my radar back in early December. There was a couple of really good days, and share price went sideways after 2 good days. That's a good sign. And then it went up again, and the share price has gone sideways. In fact, it's gone up a little bit. So there's a lot of enthusiasm from buyers right now when it comes to Kogan. I'm not sure what it is. Maybe the company will release a positive trading update. Maybe it's just this season, this time of year, that sort of thing. Do we usually see interest in this company this time of year? Last year, not really. but the chart does look good. I'm just a little bit skeptical about Kogan and why it's going up, but maybe I should leave my skepticism out of it and just trade the chart. Anyway, so yeah, both looking pretty good. Rick Thillian. He also mentions, such as Mesoblast, it would be nice to see capital raising throughout and options like for 33 cents easy to see. No idea what you mean there. No idea. So I'm going to move on. He also mentions to comment on Friedman, if the market collapse, would you have money to buy in again on the road to recovery? Is that a question to me? Yes. In fact, my cash levels have increased. Yes, so I had a look at my cash. I had a look at my portfolios, 3 portfolios, my cash levels, and I've been just trading, selling some positions because I'm getting signals to sell, that sort of thing. Now, even my super balance has risen because I've not been buying anything for a while. And my cash levels are getting higher. I would say my cash levels right now would be between 15 and 20%. It's not something I am intentional in doing, but that's the way it's gone. And I think one of the reasons why I am a little bit, there is definitely potential that we are going to see just a little bit, I don't know at what percentage, there is potential, particularly if Trump follows through with what he wants to do. America will go into a severe recession. If he does what he says he's going to do, America will go into severe recession. So all those who voted for him, there's a lot of people who voted for Trump because of the cost of living pressures, and they're in for a lot of pain if he gets what he wants. I'm pretty sure a lot of what he's threatening is just threats, and he won't follow through. I'm pretty sure he has people in his ear saying you can't do this, and I also believe that he is more of a puppet than anything else. I think the real president might be Elon Musk. I was joking about this just after the election, and I'm starting to think more and more that Elon Musk is, he has more sway with Trump than anyone thinks. And this was many years ago, about 10 years ago, someone mentioned, I'm pretty sure it was someone associated with Rupert Murdoch, they really wanted Trump in presidency because he's easily manipulated and easily controlled. And people like Rupert want those people in power. Easily manipulated, easily controlled. I will not be surprised if that's what's happening with Trump right now. But anyway, he's not this man who, put it this way, he has the potential to be the worst president of all time, and anyone who is the leader of a company should know what a tariff is, how a tariff works. He has no idea how a tariff works, and that is disturbing. This should be the first question. Do you know how a tariff works? And if you answer no, well, you can't run for presidency or the prime minister. You have to know how a tariff works. It's just simple stuff. He's still saying that China's paying the tariffs. China doesn't pay the tariffs. It's just absurd that he thinks that. He's had like 10 years to learn how a tariff works. Anyway, but if he gets what he wants, yeah, America's collapsing. It's collapsing. There's no two ways about it. America's going to collapse. The biggest concern would be immigration, or getting rid of all the illegal immigrants. We're already seeing now a lot of towns in the United States, areas in the United States, are now thinking, oh, this can't happen to us, because if this happens to us, our industry's automatically shut down. If it happens to us, I was listening to someone or farmer, I forget where they were, I think it could have been Idaho or something like that. He said, we can't get rid of the illegal immigrants because there'll be no food going to supermarkets. But so anyway, it's going to be interesting to see what happens because it just can't work. That whole country functions on illegal immigrants. It's really weird. Anyway, another one said, I think it was a strawberry farmer. She said, no, we need illegal immigrants because white people don't pick strawberries for any price. They would not pick fruit for any price. I think that's not true. I think if you give them like $50 an hour, they might pick strawberries, but then the price of strawberries will go up significantly. Yeah, anyway. So if he follows through with that threat of deporting all the illegal immigrants, America will collapse immediately. And if that happens, all economies around the world will collapse. And that's when the markets might collapse and fall and drop. So I do have a little bit of cash on hand. And that's all I'm going to talk about when it comes to this. But again, I think a lot of what he's talking about is just trying to bully other countries, other leaders. SAF 99681, thoughts on SRV, uptrend coming to an end. Is this Servcorp? Servcorp? SRV? I missed this one, if it is Servcorp. And Trading Views thinking, Servcorp. I missed this one. This is a beautiful breakout. I don't know how I missed this one. This was November last year. On the 16th of November, share price rose 12.85%. And then for 2 months after that, share price went sideways. Exactly what I'm looking for. Share price pop up on probably some good news, trend shift, sentiment shift. Share price goes sideways for a long time. You'll hear experts say, when I say experts, I'm talking about people I listen to on podcasts, who will say, well, you've missed the boat after a 12.8% rise. You've missed it. You have to be in this company before that. But this happens a lot. Share price pops up, share price goes sideways, and then eventually share price just keeps on, just starts to go higher. It takes a little bit of time. I'd say there's probably a lot of people after the 12.8% rise, a lot of people who in the stock much earlier saw the opportunity to get out. And there was sort of a balance between sellers and buyers, enthusiasm. And when we do have that balance, you get a consolidation period. And then eventually all those who wanted to sell out, sold out. So there's an imbalance. There's more buyers who are more enthusiastic than sellers. And that's why the share price of Servcorp went from 330 up to a high of 550 after that consolidation period. Okay, so beautiful chart for Servcorp. And so is it good times coming to an end? Uptrend coming to an end? I think it's getting close. I think we're at the point where if we see the share price fall much from here, that probably is a sign. I'd definitely have a sort of a support level right there in this area. It could be anywhere there. There was another breakout, by the way, on the 22nd of August. Share price sort of going sideways. That was a little bit of a resistance level at 440, and the share price broke above that on their results. And we did see a little bit of traction after that, but the share price is struggling to go higher from here. So, that would be my definite sellout or point of sale, or what do you call it? The stop loss. I don't have automatic stop losses. I have manual stop losses. I don't put it into the system. But I would even say if the share price falls below about 460, that would also be a concerning sign. We need to see the share price start to move up with Servcorp. Rick Felly, and I thought you'd spoken about MTM before. You have spoken a lot about MTM. The chart looks really interesting. And then integrated research has just fallen. Let's have a look at integrated research again. Because this was one where the market was absolutely right. Absolutely right. And I just listened to the chart, listened to the market, and I got out of my position. And then the company released a profit. I think it was a negative trading update on the 23rd of December. And the share price has continued to fall since then, down to 44 cents right now. So not in integrated research anymore because, the chart spoke to me. So really interesting year for this company, particularly from May through December. A really good update from the company in May, and sentiment has shifted back to negative. And you also mentioned something else here. What was it? HPI, hotel property, CEO confirmed my questions on CQR 50%, stock brought in takeover. Okay, I'm just going to move on from that. News or want to concentrate in book publishing? Oh, that's getting rid of selling Foxtel. Yeah. I don't want that. Not sure there's much future in book publishing, to be honest. I always thought Foxtel would be there, particularly the sports side of Foxtel would be what's the word? Would be their prized asset. Put it that way, and they decided to sell it. I'm not sure what their prized asset would be probably REA Group. Don't they own REA Group? That's News Corp, isn't it? Yeah, I'm pretty sure they own REA Group. Not all of it, a little bit. So News Corp, REA Group. Yeah, majority owned by News Corp. Yeah. So I'd say News Corp is their prized asset, to be honest. Yeah. I'm going to change that. REA Group is their prized asset. And to be honest with you, it's fair enough because I think REA Group is an absolute one of the best companies on the ASX. I'll just say that. Rick Thellian, on AMP, they hold 5% of their holdings in Bitcoin from about April before huge increase up about 40%. Really, AMP hold Bitcoin? That would be weird. By the way, Bitcoin's back below 100,000. And go back. Bitcoin back below 100,000. Actually, it's back below 95,000, but it's not concerned just yet. It just shows you that, round numbers, important numbers, like $100,000 is very important. And sometimes it can take a lot for a company or for an asset to break above important levels, like 100,000 or 10,000, 1,000, 100, $1, 10 cents. They're all quite important. All those, what's it called, factors of 10 or whatever. Okay, Rick Thellian, just comment after comment. Employment rate in the United States decreased to 59.8%. Oh, employment. Okay. Okay, thank you for that information there from the US Bureau of Labor Statistics. And my question was, if CQR is trying to take over HPI, CEO has said reject offer. The main part of the question was, if CQR had more than 50% of HPI as they do now, don't they have majority voting rights besides approval? There must be. I don't know the rules about it. I do know there's a compulsory takeover if they get above a certain amount. But maybe they need 75% approval. I don't know. I actually don't know the answer to that one. Anyway, yeah, interesting thoughts, but yeah, maybe I don't know. I honestly do not know. Ari from Gazmo, Ari SGLLV, so that's Sunrise Rollers or something. You would think with high cost of living, simple, cheap food staples would do well. Rice. Yeah, rice. Maybe. I don't know, but the chart looks really good. SGLLV. Chart looks. Is anyone complaining about this chart? I'm not. Look at that. Nice little breakout back in 1 year ago. Share price of this one has gone from 640 to 1040. That's a nice chart. And maybe that's why this company has been successful because, there's probably some truth to this. Simple, cheap food would do well. I'm just looking at my life. I go into the chocolate section. I go, nah. Too expensive these days. I only buy it on special. Go to the rice section and, that's pretty good prices there. I actually am doing that more and more now. I'm just thinking, I remember this product half the price it was not that long ago. I'm not going to buy it now at these prices. No way. Hopefully more people are doing that to give everyone the clue that things have gone up way too much. Of course, they're not going to listen to us. Cam Cormalus, what is happening to CUV, Clinuvel? Let's have a look. I'm pretty sure I've discussed this before, Clinuvel. What is happening to Clinuvel? It's just people selling. I'm pretty sure I've talked about this, haven't I? Clinuvel, people are just selling. I think this is becoming as the share price keeps on dropping, I think it's becoming more and more attractive as a value play, which I didn't think I'd ever say that about Clinuvel. I think even the management don't understand why the share price has been dropping. There's no reason for the share price to be dropping. They're still growing at a pretty good rate. Share price is dropping. So there is a disconnect between what the company is doing and the share price in the chart. And in those sort of situations, rises opportunities to buy these sort of companies at much better value. Now, I wouldn't call Clinuvel right now as a high quality company. It definitely has the potential to be a high quality company in the future, but I wouldn't go that far just yet. The only thing I noticed is the share price has dropped from a high of $44 down to $12.46. But the company is better right now than it was back when it reached its high. So it just shows you how sentiment can drive the share price of a company down almost 75% on nothing, just a shift in sentiment. That's what's happening with Clinuvel. No negative news, nothing like that. It's just negative sentiment. And I think I mentioned the last time I talked, the company has released a couple of really good announcements. Maybe not really good, but good announcements. Share price popped up, and then the share price pulled back almost immediately. That shows you there's a lot of resistance. There's a lot of shareholders who bought these shares at high prices, who, whenever they see the share price rise, they automatically sell. And that really puts pressure on the share price. We have seen it quite a few times in the past year and a bit. And eventually those shareholders will get out, and we'll see new shareholders, and eventually the share price will go sideways, and eventually when sentiment starts to shift, because if the share price goes sideways for a long time, all those shareholders who want to sell will eventually sell out because they become bored, and you get it like a refreshment in the registry of shareholders, and then eventually share price will pop up because fundamentals eventually win out in the end. Now, something bad could go for Clinuvel. They are trying to diversify their revenue streams, that sort of thing. And that's one thing I really want to see them do. I really want to see them diversify the revenue stream. But the revenue stream right now is still growing. And if you don't believe me, let's just have a look. So revenue keeps on increasing every single year. Pretty nice margins as well. By the way, profit of 35 million and the market cap is 608. So that means the P ratio, it's like below 20. It used to be about 50 or 60. And people were willing to buy. So it just shows you sentiment is so important. Gazmo, +1 for Sigma Deep Dive. Oh, we're now getting, I'm up to date now. So we can talk about companies that we crested over 2 weeks ago. Tabcorp dropped 10% of staff, price down 1.8% to 54 cents. Australian dollar has dipped to its lowest level. Yep, keeps on dropping as well. And Alan Kohler says the country's economy would have been in a 20-month-long recession if not for immigration. Yes, he's absolutely right. He's absolutely right, because GDP has been going up, but per capita GDP has been going down, and the difference between the two is increasing people. Immigration. Yes. Would it be in a very long recession if not for immigration? And just imagine if the government wasn't spending a lot, would probably be in a deep recession as well. So government spending, immigration has kept us out of a recession. And that's why it doesn't feel good out there. That's why people are saying there is this cost of living crisis. Even though we haven't been in a recession, we're in a per capita recession. It's a real recession. We should look at we should redefine how recessions are defined, because it should be per capita. It's just like when I look at a company's revenue or profits, we look at a per share basis, not on an overall basis, because that's what matter. Per share, per capita. I really think we need a rejigging of our definitions. And we've been in a recession. In my opinion, we've been in a recession for quite a while. I'm not sure about 21 months, but we've been in a recession for a while. Now, Tabcorp, this chart has popped up on my screeners. So 54 cents a few weeks ago, and now the share price is up to 58 cents. So it has popped up on my radar. Share price in a downtrend. We've just seen a crossover the moving averages. Share price is in an uptrend right now, I'm calling it. So the way you could play this, or even I could play this, is buy right now, and if the share price falls below this uptrend line, this sloping dashed line, you just sell. I wouldn't be surprised to see the share price sort of oscillate now, going sideways, oscillate for a bit. Otherwise, I'm not going to say what I think about this company. It's not that hot. It's not that good. But otherwise, the chart looks good. So keep my thoughts about the company itself out of what I'm seeing on the chart. Okay. Hey, mate. H or DSW HW5CC. Hey, mate. Thoughts on Ramelius, gold producer with little to no sovereign risk, with values high in the general market, inflation possibly ticking up again due to tariff wars and gold on a tear. I was thinking if today would be a good way to offset risk. Ramelius is solid, probably better value to be had in the gold miners, though. Okay, so first of all, I would probably say that I'm not getting completely out, but I am decreasing my exposure to mining companies, because I had a look at how I have performed in different sectors, trading and owning, and definitely mining. I do not have any sort of advantage with mining companies, and I'm fine with that. I'm fine with that. So I'm limiting my exposure to mining companies, but I will trade them, particularly when they're near the bottom of the cycle. Gold's not there just yet. Anyway, Ramelius chart looks fine. A beautiful looking chart from the bottoms back in 2022. A little bit of pullback recently, but again, you can just see the volatility in gold prices just by looking at any sort of gold company's chart. So I think this comes back to what your thoughts are on gold. Are you bullish gold? Are you bearish gold? That sort of thing. I am neither. I'm not bearish nor bullish gold. And the reason I'm not bearish or bullish gold is I realize you just can't be bearish or bullish on any commodity because you just don't know. Just don't know. That's my thoughts. Tariff wars. Tariff war, yeah, I'm not sure what happens. Inflation possibly ticking up here. So the reasoning here is absolutely fine. Gold's not on tear anymore. If you have a look at gold right now, it's really weird. I thought, so gold is still in an uptrend, but it is starting to show a little bit of weakness. If it falls below 2,560, the last lows we saw here, that would be a really negative side. But the very fact the last two highs in gold, we didn't see any strength. So there's a chance that gold has finished its uptrend, maybe. But in saying that, inflation, if Trump gets his way and he puts massive tariffs on all these countries, inflation is going to explode in the United States. I don't think he understands that. I'm pretty sure he's been told it from his advisors, but he just thinks gold or tariffs are the most wonderful thing. Tariffs are taxes. If he just said taxes are the most wonderful thing, do you think anyone would vote for him? Probably not. But tariffs are taxes, and they're taxes on the people of the country, not on other countries, which he doesn't understand. Okay, that's it for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.